The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the Morgan Weekly Perspective for the week ending 24 January 2025. Well, I'm going to go ahead and start off on my Twitter account here and bring a few things to your attention. First of all, James Anderson always does a great job. I would highly recommend that you listen to what I reposted here on the Twitter account. He goes through a lot of material and also posts an interview of a TD bank securities analyst or silver analyst. I did a pretty good job about the silver deficit and where he actually used the word silver squeeze could come about. So highly recommend you take, I don't know, it's 10, 15 to 18 minutes, but it's worth it, in my view. We had record prices in gold throughout a lot of fiat currencies this week. I heard one commentator say it was a nominal and record high. It may have been in a foreign currency, a new record in beyond nominal value. Of course, in the U.S. terms, it's not the same purchasing power as 850 was back in 1980 when it peaked. This week, so many years ago, what, 55 would it be? 1980, January 21st. Moving on, we posted a couple things about, the new highs and the opportunities, of course, in the mining sector, which is really, really phenomenal. Maybe that's too harsh a word, phenomenal, but in terms of value, it's about a 40-year low with gold stocks relative to the price of gold. So certainly opportunity if you care to look. In fact, one of our top tier picks that we've had for a very long time. It's investing. You pick a winner and you stay with it. That's why you own blue chips. Made a new high this week. So we're happy to say that. We have a rather limited list because you don't really need to pick a ton of stocks to do well. In fact, if you pick a lot of stocks, you actually can, in most cases, dilute your performance. Moving on, this is from Bitcoin Crowdsource, The Truth, which does a great job. Bitcoin is an open source censorship resistance peer-to-peer immutable network. Trackable digital gold. Don't trust, verify. Not your keys, not your coins. So just giving a warning there, just like if you don't hold it, you don't own it in the precious metals world. A little piece about palladium. Palladium this week actually outperformed platinum quite a bit. Percentage-wise, I expect both these metals, as James Anderson pointed out in his video I started this update with, talked about what he feels will go on later as this bull market develops, and I agree with him. He basically said all three of the white metals, meaning silver, platinum, and palladium, will all probably be making new highs, probably nominal, but certainly much higher than they are now, and maybe on an inflation-adjusted basis, new highs in that realm as well. And this one is, I think, worth pointing out, although I might get some blowback. I posted this when McKinsey says that solar is going to level off. Again, if you go to SD Bullion, James Anderson's video, the analyst talks about that. And most all of us that really dive deeply into this market, we try to stay awake, aware, and as truthful as possible. And of course, there's a lot of subjectivity in all of this stuff. Regardless, it looks like solar capacity is probably overdone in China right now. So don't expect solar to have a huge move versus 2024. This is the projection right here. It's actually projected, you can't tell, but to come down slightly. I agree with that. I put up this visual and did not see who it was. I'd give them credit, but I get so much information so fast, it's hard to track it all down. But someone reposted this and asked, well, where's the U.S. in that? It's not there. I'm laughing because you can see anyone that's followed the metals market, even at a cursory level, knows that Russia and China have been buying gold hand over fist. And of course, Russia recently announced that they're starting to add silver and the other white metals to their stockpile. So there's been a lot of talk recently about the deficit that's gone on in silver about 4 years in a row. I want to point out to everybody what I've been talking about, if you follow my work carefully, about the structural deficit that occurred between 1990 and 2005. So 15 years. If you do the aggregate and do an average, it averaged 100 million ounces per year. Obviously, some years were greater than that and some were less than that. But on average, or on aggregate, if you took the whole thing, that's 1.5 billion ounces that were sucked up out of the above ground supply. In fact, right here where it started to cross over in 2005-06, we were at an all-time low of probably 500 million ounces. And that's from official sources, not made up, a number made up by myself. What's very interesting for everybody is that during that 15-year structural deficit in silver, we see the red line, which is price, which basically for about 12 or 13 of those years was flat, even though we were sucking up silver, sucking up silver, sucking up silver. Price remained level, right around the $5, $6 level, as you can see from this chart. Once we started getting in the latter years, the last 3, 4 years, it started to move up, got all the way up to 10. And then, of course, going into 2011, it really spiked. So I just want to make everyone aware of this, that you would think with that many years of structural deficit, the price would have moved. At least I would have thought that. It did not. Not saying that this is what's going to take place in the future. What I am pointing out is the past, and that history usually rhymes. So what I'm pointing out, and I think is the most likely, is that silver will do what it has done so many times, and that is to surprise everybody, including yours truly. And just when you kind of give up, it all of a sudden just rockets up. As you can see from the financial crisis, which isn't on the chart, but occurred in 2010-ish, we went from basically a spike low, which it doesn't show here because it was very momentary, but it was down to about $9. And it went from the $9 level, where I've got my little cursor here, and it went all the way up to almost 50. So it went up almost sixfold, fivefold, better than fivefold, or 500% in a very short amount of time. And that's why I'm so often quoted about, 10%, 90% of the move comes in 10% of the time. Silver tends to do nothing and wear you out. As I've said, scare you out or wear you out, so it does nothing for a very long time. People get discouraged, give up, whatever. And then all of a sudden it just takes off and you wish you were on board. I expect similar behavior going forward. And one last note, after it peaked in last day of April, early May 2011, the price came down quite a bit, flattened out again, going nowhere. Come up in recent years, as you can see, it's kind of fallen off here from the touching 34-ish, I forget the exact number, down to where we are now, approaching 30 plus, almost 31 this week. And I still think we're going to go sideways in a pretty broad trading range for a while before we break out, but it could happen at any time. This was a chart posted on Twitter by Peter Kraut, my friend, silver analyst. In fact, I just did a podcast with him. It should be posted next week, probably by Wednesday. And what this shows is the large undeveloped silver deposits and projects. And you can see that the project names are here. The category is M&I, measure and indicator, which means it's really real. The inferred, you can't take as seriously when it's M&I. It's basically bankable. P&P, proven and probable. M&I is the highest, proven and probable next, and inferred just means it's a very good guess. So with that in mind, you can look at some of these deposits on the ounces. And here you've got 542 million ounces. The next one down, almost 500 million ounces. And you drop all the way down to 273, and it goes below that. What I want to point out about this is my take on it. And of course, I'm not going to make some of these mining companies happy, but nonetheless. So if you look at the two biggest deposits and you look at what the grade is, and you're looking at the grade is in grams per ton, you need about 32 to get an ounce. And so both these biggest deposits, and that's my best freehand straight line, are less than an ounce, which means $30 or less per ton, which is in most cases not rich enough to make a mine. Now you're going to hear the miners say different than me, but I have a lot of experience and I'm independent. I get to tell you what I think and how I think. In fact, one of the best in the business, I won't name him, but very well respected, probably known as one of the best ever in Mexico, taught me very early on that most open pit silver mines are uneconomic. They do not make money. So if you take those two out, you're going to lose about 1 billion ounces. So remember that we use about the silver market's about 1 billion ounces a year. So all mining, which is around 850, and recycling is about 150 million ounces, combines for about 1 billion ounces a year. So those two projects represent 1 year. So if you take those away because they're uneconomic, and I would say you're really not economic till you get to about 3 ounces. Of course, it depends on the price. If silver goes to $100 an ounce, then these two would become very economic. But under current conditions, they're not. So bear that in mind. Well, David, I said based on a $30 silver price, I don't feel that they are. But based on a $100 silver price, that's like getting 3 ounces because the price is tripled. Regardless, in today's environment, I would actually cut this off probably about here, which would cut out some of these other mines. So you're really looking at maybe 1, 2, 3, 4, 5 or so. And you could tell as the deposit gets lower in quantity, the circles get smaller. So you're really looking at maybe something like this. And I haven't done the math. I'm not going to do it all in my head, but you're looking at 3, 4, 5, 6, 7, 8, 9. So you're looking at about 1 billion ounces with all those small ones that I would say are probably economic at this point in time. So what I'm really trying to point out here is that there isn't a whole lot of known silver deposits that's just going to keep the flow streaming along. Recycling will probably improve, especially if solar panel industry learns how to recycle silver out of those panels in an economic way, or maybe a government subsidized way. There are governments that mandate certain things, even if they are uneconomic. In fact, governments are pretty well known to misallocate their funds. So one of the last posts, and I'm going to wrap it up here, is there is a Twitter post. If you're on a free email list, you've already received this a couple of times. But I'm going to do a AMA, Ask Me Anything, January 28th, which is next Tuesday at 10 a.m. Pacific. That seems to be a good time worldwide. We'll record it. And it's absolutely free. That's not a hot link, but I'll show you where to get the hot link on my Twitter feed. Otherwise, you have to get it off the free mailing list. If you haven't signed up for the free mailing list on the main page, just go to themorganreport.com, give us a first name and an email. The autoresponder will verify that's a valid email, and then we'll mail this out again on Monday so you can sign up. So I just enlarged that. This was published on January 24th. And if you scroll down below that, you have to kind of be a little bit careful, this live AMA. Right above that, registration for the AMA webinar is right there. So it's between this printout here and this one here saying something about the live AMA. So right there, if you click that, you will see this page, which just asks for a first name, last name, you can put in an initial, I don't care, and a valid email address, and you register there, and you will be in. There are limited spaces. I do have Zoom, StreamYard, and WebEx. I usually use WebEx. It's kind of the Zoom of the early days. It was the best gold standard at the time. I still use it the most, and that's where it will be. So come on board, AMA. We'll start it off. You can ask me anything. Some things that are maybe on an NDA, non-disclosure agreement, I wouldn't be able to answer, but I tell you that they are in an NDA and why. So that'll wrap it up for this week with the Weekly Perspective. David Morgan signing out.